Hello and good morning. I welcome you to the morning meeting today on Monday, the 26th of February 2018. This is Jens Klatt speaking and exclusively presenting this format to you for JFD brokers. We want to have a look at the market opening and want to have a look at how especially equity indices are starting into the trading week. The DAX has seen a quite strong end of last trading week, mainly due to the US equity markets, which have pushed higher into the weekly close, and that was one driver for the DAX here, which brought it up and above 12,530 points. So we've started already with some gains into the week, but now the market is giving them back here and drifting lower and falling back below the exponential moving average 50 here on a 5-minute time frame, which is not a very good sign from an intraday perspective. So it seems as if the momentum on the upside is clearly diminishing. So we opened, as you can see here, these are the highs respectively here. These are the highs from last Friday. So you can see we're open above them, which gives us a true gap, which was closed in here. We retested also the close and trading around this close from last Friday here. No further momentum is taking on the upside, as you can see. So the market has clearly some troubles right now here to gain momentum. It's not that we're seeing big bearish momentum. On the other hand, nevertheless, it's more likely that the market will probably give back those gains than to now see some strong demand coming into the market, pushing it higher. Things would change very, 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 very short term here if we make it back above 12,560 points. It's only 20 points, but currently, it's just like that the market is not seeing any big momentum here. Let's just see. I made it in the German version of the morning meeting already a topic. I said, well, the first traders probably see this potential region around the highs here, around 530. If you zoom into the chart, you can see that. Probably see this region as a potential long trigger and are willing to take long engagements against this level. The problem is if we're not seeing demand coming in, and currently it's obvious that there's no real demand coming in, market could drop a little lower than that. And now the problem from a trading perspective, technical perspective. So if you're going long here, question is, where do you place your stop? I think from an intraday perspective, probably makes sense to work with a so-called volatility stop based on the ATR 14, which is currently trading at 10, meaning that the average range of a 5-minute candle is 10 points. So what we could do is work with a 30-point stop. Now imagine you're going long 12,540 here, working with the 30-point volatility stop, 3 times the ITR. So placing the stop here at a level which can definitely be considered another potential long trigger here on the downside. So could be that the market is not finding support here, respectively demand coming into the market, pushing us above 560 again, but in fact it's drifting lower. We are getting stopped out and then find here a long trigger against which the market is probably seeing some demand coming in. That's the difficult thing here. So what I said is, and you can clearly see that I'm willing to take the long side instead of the short side. So it's not that I'm heavily bearish here or something, but I consider this break on the upside out of this range here to be quite significant. I think it's very important to see that we have further potential. If we duplicate this range, we have further potential not only up to 12,650 points, but also to, let's say, 12,780, 12,800 points. That's definitely possible if you duplicate this range here. So I definitely favor the long side, even though it's quite difficult to find a good trading spot here, how to trade this. And so what I said was probably trying to get in here with a first small position. If this doesn't work out and you're getting stopped out, well, try the other half probably here in this region, working with another stop then, probably below the lows from Friday, something we would have to look a little closer at once this really happens here. And that's how I would right now see the DAX, even though again I definitely work with a reduced position size here, because even if you are bullish, it does not necessarily mean that big demand is coming in. We've seen this on Friday already. The main driver where the US markets, US equity markets, so the DAX hasn't seen any big demand here during European trading hours, and that's something you have to definitely be aware of here. And probably I'm not seeing your expectations growing too high. So it's definitely possible that we are not seeing big moves now in the upcoming minutes here. Even though, let's see. I mean, 50 minutes, 10 to 50 minutes from now, we'll have a final look here at the DAX when we finish here this event. Probably we made it back above 560, and from there see another push towards 600. If this really happens, by the way, then the targets on the upside are 600, 650, and then 700, probably 730, 750. But it's a very, 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 very long way to go from here. And it's not only that we need to find a demand now, but it's also then important that, for example, US equity markets see some demand coming in, even though we have to say it's already quite strong that we now made it above the starting point of the flash crash here at the 5th of February. I consider this already to be quite strong. And if we can forthright this here on the upside, this bullish momentum, probably we can make it up to 26,000 into the monthly close. And in fact, that's something which would make back most of the losses we have seen here. I mean, if you look at the first tick, which was around 26,200 points, the market, the Dow Jones here, lost nearly 3,000 points, which was more than 10% within days. Is this correct? 3,000? Yes, it's correct. So we lost 3,000 points here, and now let's imagine we are making it back towards this level. That's making or reducing the loss to something like 10%, 2%. I'm sorry, probably a little more than that. I haven't calculated it accurately here, but nevertheless, it's quite strong. And I have also to say that volatility is still diminishing here, and what I think is definitely very difficult is the bearishness you can hear between the lines of several people talking about the markets right now. So skepticism making rounds here. People saying, hey, rising yields, this is definitely something to worry about, and probably the market hasn't seen the lows yet, but there's another aggressive leg lower. All this is 100% true, and there's no question about it. But nevertheless, it's there's so much skepticism in the market right now that I think this alone avoids an aggressive push lower, because the skepticism usually is a good sign that markets are getting more and more cautious here and buying insurance, which leaves the market I wouldn't say invulnerable, but less vulnerable to such sharp sell-offs as we've seen in the markets at the beginning of the month, because there the market was heavily exposed on the long side, and only seeing higher highs, low volatility, and no one really feared a drop bigger than, let's say, 3-4% in the Dow Jones, if at all. And this is something which is currently resulting in this good skepticism, which could result in a quite okay, let's say, monthly close here. And this means that the upcoming 3 days probably we won't see big moves coming here, even though, be aware, and therefore let's switch over to the website JFD research here. So first of all, let's have a look here at jfdbrokers.com. And at jfdbrokers.com we have a section research and education, so it's a German presence here, so we switched towards English, and then we see here research and education, and there we can find not only several articles on several markets you might be interested in, but also if you scroll down a little you can see that here there's an economic calendar building. 1 second, takes a little, there we go, and there you have now plenty of news events coming, and I'm really, it's getting interesting on Wednesday then, because the market, yes, it's definitely very, very yield sensitive right now. So we can see that it's ranging between 2.8 and 3% on 10-year yields, and this range bound trading is something to really worry about, to be honest. It's definitely something to worry about, because if now data comes out and data disappoints, what's definitely a possibility here, what does this mean? Well, I think it means that there's a high chance that market could see another sharp drop. So meaning bad data could be bad for equities, because then fears around stagflation probably step in and probably result in some more aggressive volatility here. So right now, I'm quite positive because the market is calming down. Nevertheless, if data disappoints, especially from the economic docket here from the US, there's a good chance that with volatility, then not with volatility, with fears rising again, that there's stagflationary tendency. That this could result in further higher volatility. But all in all, right now, I have to say I'm quite confident that there's a better chance and better risk rewards on the upside than there is on the downside. Even though the DAX is again and is not presenting itself so strong here and not building really momentum, and now falling below the 50 exponential moving average 50. So from an intraday perspective, it's the complete opposite of a bullish market environment in which we find ourselves in. But let's put it that way. So U.S. equities saved the weekly close last week. There's a good chance that this happens today again, and probably with U.S. equity markets coming in, if they support or if they see demand, this could also drive the DAX higher then. So I'm not very sure whether that was the last attempt to attack 12,600 points. There's some potential for another attack at this level. By the way, attacks of significant levels. Let's have a look at Euro USD. Very interesting level we're currently testing here. We've mentioned this already on Friday. 123.50. Again, the economic docket is quite thin, even though there is some data coming out then from Wednesday onwards. Till then, there's a good chance that the market keeps on building momentum, in this case on the upside. Currently the euro is seeing some capital inflows. As you can see, we are not talking about big moves, but 123.50 is a quite crucial level also for intraday traders, because if we make it above that level, there's further room for another stint up to 124 probably, and definitely something to look at and worth watching what we're currently seeing here. So the DAX definitely has some good room then on the ups. The Euro USD has some good room for another 50-70 pips probably on the upside, and based on that, and if we really make it above 123.50, that's one good reason not to be short in the Euro USD currently. But the euro is probably about to stabilize here. Respectively, the US dollar is losing some momentum after it has seen here the bulls fighting back and holding the support region around 88.30, but we never made it above 90.50 again, and now we're seeing some US dollar offers again in the markets, and this is something which should be considered quite difficult, let's say. So we keep on seeing a bearish consolidation here, which is in fact positive for gold, because gold now has seen a quite strong start into the week and made it above 1,335. You can't really see this here on the daily chart, but in a lower time frame, in the hourly chart for example, that was a quite crucial region, and you're seeing there was a push higher. We've mentioned this already last week on Thursday, this diminishing momentum here on the downside, and we said, well, probably the market is about to see a sharper reversal. It happened then in the next hours on Thursday, and the interesting thing is that the market didn't make it above the highs from Thursday here on Friday, but started very strong into the week and now sees the break here, which is quite positive, and to me a bullish sign, which makes it likely that we're about to see another test of the region around 1,360 to 365. So if we're now losing some momentum here and we see a pullback, then have a close look here at 332, 333 USD per ounce. This is definitely a level to watch and potential long trigger against which one could see some new demand coming in if we are now seeing a short term corrective move, and from there, well, if we make it then above the highs around 340 here, then the next target can definitely be seen around 360, 365 on the upside. And that's it from my end into the weekly start. And if you have any questions, please shoot me an email. And happy trading. Watch your stops. Talk to you again tomorrow, 10:30 a.m. GMT, here with the morning meeting in the YouTube channel from JFD Brokers. To never miss an event here in the future anymore, just give us a subscribe on the on YouTube, and you get a notification via email here every day. And yeah, that's it from my end. So happy trading. Watch your stops. Talk to you again tomorrow, Tuesday then, and on the 27th of February. Happy trading. Watch your stops. Talk to you soon. See you. Take care and bye-bye.